Hi everybody, Alex Employer from Expert Forex, and in this video I want to ask you to stop using robot set files and optimize settings until you've watched and understood this video. It's going to be a very short video, but it is a major point that 80% of set file users or optimized setting users ignore. Now I am going through a process of evaluating changes that we are making to the profit retriever. On your screen you can see a video that I made yesterday, very popular, almost 3,000 views on this particular video, and it details the changes that we are making to the profit retriever, and obviously those changes need to be tested and forward traded and so on. So the first step is really just to get some basic optimization done, and here on your screen are the results of one of the optimization runs. This is on a 6-month period. The EA generated $195,000 over the 6-month period traded and started with a $10,000 balance. And it had a drawdown of 65,000, which is so much less than what was generated. In other words, it's generating about 3 times the drawdown that it is making. So here are the basic results that I've come up with so far. So what I then do is I summarize these results, and there you can see the results, the drawdown, the success rate, number of trades, and so on. And the annual return on that amount, and because that's 6 months, the annual return is almost 4,000%. So it's a really ridiculously high return, but it does show that this EA has amazing potential. Then what I do is I extract the settings that generated these returns, and there they are: the gap size, initial lot sizing, and so on. And I run 2 sets of settings, aggressive settings, and then I have the low drawdown settings, which they generate a slightly lower drawdown, and there you can see the results over there. Now this is where most traders just stop and they say, I've got my settings, I'm going to plug these settings into my demo account hopefully, and I'm going to test them over the next few weeks. But there is a step that one has to do before that, which I do subconsciously, and I've realized that I just do it, and I assume all other traders would use this logic. So let me show you what I do. So here are the same results that I've shown you previously. I'm saying, okay, my goodness, I have a $10,000 account that I'm going to be trading. I cannot afford a drawdown of 65,000. I mean, that's really ridiculous. What I would like is a drawdown sort of 4,000 would be more acceptable. So the very first adjustment I make to my optimized settings or my set files or anything that you work with relating to settings, I look at the drawdown, and then I look at what kind of drawdown I would like. And the drawdown, well, in this case, I'm happy with something just over 40% or 36%. So I then use that as my target drawdown. So in order to get that drawdown, I have to adjust these settings to give me that drawdown, and it's very easy to do. So all you do is you say, that amount of drawdown is generated by so many lots. I want to do that amount of drawdown. How many lots should I have? And here is the formula. It's a very simple formula. You look at the targeted drawdown, let's say 4,400. You divide it by the actual drawdown to get a percentage. So you get a percentage there, and then you multiply it by the original lots used. Boom, boom, boom. And you get a result, which in this case is 0.08 lots, and that's where that 0.08 lots comes from. And now, by using a 0.08 lots, suddenly the drawdown drops right down to that number there. But you also have to adjust the earnings. So your earnings have to be reduced by the same amount. So proportionately, I've reduced the earnings to that number. And again, remember, this is a 6-month period. So the annual return now drops right down to 260%. Now, I tell you, 260% is still very acceptable in a portfolio of trading instruments. So I can even adjust a little bit, some of these settings a little bit more to get even lower annual returns, but also lower the drawdown number. So that's the purpose of this video. I want you to make sure that everybody that ever used set files or optimize settings, that they are doing this process of adjusting their drawdown numbers to the account that they intend using. Now here's another example where we supply monthly optimized settings, and here's one for the profit retriever. It's generated $150,000 over a 12-month period, which shows you how good these new settings are. They generated that more than that over a 6-month period. But there is the number. But again, we provide you with all the details about the numbers, and there is the drawdown number. We also provide you with the settings. So for instance, the settings here for the pound, there is the initial lot amount. So essentially what I would do here is I must probably divide that by 10 or 12 to get a more conservative drawdown number. Same thing here, that needs to be lower. I must probably divide that by 12 or 15. That's the number that I would divide, and you will then be left with a much smaller lot size, but your risk will be lower because your drawdown will be in a manageable area, and your income will still be pretty high. Even if you divide those numbers by what we spoke about, you will still be generating well over 100% return on an annual basis. So very important adjustment. I think a lot of people ignore this adjustment and start trading at 10 to 15 times more risk than they should. And the obvious conclusion is they're going to blow their accounts. So I urge you to stop using robot set files and optimize settings until you understand the contents of this particular video and make that adjustment that I've just shown you to all your settings. Just to be clear, those settings that are adjusted aren't the final settings that you'll put in your live account. No, I will trade those settings for at least 3 to 4 weeks to make sure that they are robust and are generating reasonable risk-controlled results. So I hope you've learned something from this video, and from me, Alex Aploy, cheerio.